Today's question that we're going to answer is, what are some investing myths that we run across that can potentially cost investors money? Well, the first myth that we run across is that the stock market is a rigged system, that you can't win over time. Well, if winning means accumulating value and growing your portfolio over time, well, guess what? Growing over time is the reality. The myth is that the system doesn't work or it's somehow rigged or in favor of institutional players and traders. That can certainly have some impact in the near term, but over the long term, the stock market has done very, very well, and it has created a lot of wealth and value. So the myth that we want to talk about first is the stock market is rigged. That is a myth. The next myth is that my broker or advisor is not a fiduciary and it doesn't matter. That's a total myth. It matters. Remember, fiduciaries are required by law to act in your best interest as the investor. That means that their recommendation, any compensation, any conflicts of interest have to be disclosed to you with some specificity. They have to detail it. That's why we don't see a lot of industries that have fiduciaries operating within them. If they're working on a sales commission of any sort, typically they are not a fiduciary. So the myth that we run across is, well, my broker says he's a fiduciary, but he doesn't say it on the bottom line, therefore it doesn't matter. That is simply not true. And then the last myth that we run across frequently is that higher risk absolutely means higher returns. Well, I'm here to tell you that that is not necessarily true. However, it is certainly related. If you stick to very low risk investments over the long term, you will have a relatively low performance over time. If you stick to very high risk investments over time, your likelihood of being successful over the long term really is relatively low. What makes more sense is to manage that risk, and so you balance it. Hey, I want exposure in these different sectors, in these different industries, and in these different sizes of companies, and inside the US and outside the US, and corporate bonds and government bonds and commodities. You want to diversify. That's how you manage risk, and typically that's how you reduce risk for a given level of return. So the question that we answered today is, what are some investment myths that we run across? Thanks for visiting our channel. We hope you found the information valuable. If you want to see more videos about investing, please click to subscribe. If you have any questions you'd like for us to answer, please send us an email to harvey@riagroups.com. We would love your feedback.